You might have noticed over the last month that the market's been a little more chaotic after what seemed like we were headed for a strong recovery this year. And although these downturns can last anywhere from a couple days to a few months on average, I've been seeing a lot more investors who are concerned. I've been getting a lot more messages and comments from people asking if they think they should sell everything and just wait until things get better in the market. So I wanted to make this quick video that'll highlight what I think dividend investors should be doing and in my opinion is the best reason for being a dividend investor. Every day when you log into your brokerage account, turn on CNBC, or read your favorite financial website, you'll see that some stocks are in the green and some are in the red. When we experience these long downturns when the majority of the week is in the red and we have several of these weeks in a row, it tends to cause a lot of anxiety. We've all bought into a stock or an ETF and then it'll immediately go down and we'll question if what we did was a good idea. We'll look closely at the share price of a stock, that little line that moves across the screen as the day goes on, and we'll worry if it's going to finish in the green or in the red. All of the world's greatest investors will tell you that in order to be successful at investing, you have to remain emotionless. When you're picking investments, you need to analyze them very carefully, figure out which companies are well run, and then invest in the stocks that you think have the most potential. Still though, it's understandable that oftentimes when we invest in solid companies and well-performing ETFs, people can still panic to see these investments drop in share price for a lengthy period. And this impacts most types of investors, including growth investors, value investors, index fund investors, and so on. But let me explain what makes both dividend investing and income investing different. When we invest, the most important thing are the dividend distributions. While share price is not something that we just completely forget about, it's not the only thing that we look at. In fact, for people pursuing the goal of living off dividends, the share price of our investments have a very minimal amount of our attention. The best thing about being a dividend and an income investor is that when we log into our brokerage accounts, the share price is not what's most important, it's the transaction history on our accounts. If you're trying to live off dividends, the day-to-day movements of your investments should not matter if you're investing in solid holdings. What should be focused on most of all is our account's transaction history, or in other words, the dividends that are being deposited into our brokerage accounts. Hopefully you're reinvesting your dividends if you're not currently living off dividends, but seeing these amounts grow as the months go on should be what you're focusing on. This is going to be significantly more appealing to look at than the share price movements each day. Share price ultimately does not matter as much if you're trying to live off dividend payments. You shouldn't care if one of your favorite dividend holdings goes down and remains down for months or even years if you're committed to someday living off the money you're receiving from that holding. What I'm suggesting is that you don't pay attention to the daily share price movements of your favorite dividend stocks. Now I know some people are going to ask, what if my stock tanks? That's why I said if you're invested in solid companies with great track records, then you shouldn't be worried. If you're invested in ultra risky holdings with super high risk, then you should keep an eye on them. And I know corporate scandals can happen to legitimately good companies, but dividend and income investors should not worry about the share price performance of any of their investments. The only thing that it's going to do is add stress to your life, which might cause you to make a financial mistake, like selling out of a holding before it's about to recover. Look at the long-term trend in the overall stock market. No matter how bad of a dip we experience, the stock market has always moved up and it'll continue to move up. As long as there's people out there who want to grow their money, then the market will always keep rising over the long term. When the market is down, that's actually the best time to buy heavily into dividend stocks if possible. Because as share prices fall, the dividend yields are going to increase and you'll get more dividends each month or each quarter. As a general rule, if you're investing money that you'll know you'll need within the next 5 years, you shouldn't be buying stocks with that money. So I really want dividend and income investors to keep this in mind. I don't know when the market is going to fully recover and nobody does. Nobody knows when we'll start seeing interest rates get cut either. But trying to predict the bottom by selling all of your holdings and buying back in later is almost impossible. Stay invested in all of your stable companies and don't panic about the markets falling. Just kick back and relax and look at the transaction history on all of your favorite dividend holdings and just enjoy watching these numbers go up over time. Don't stress about share price movements like all the rest of your investing friends have to do. That's all I wanted to say. Thank you all so much for watching today's video, and until next time, take care.